coming across some different things in the market right now. Everybody wants to talk about the state of the market as it relates to, national disasters and things of that nature. But there's a bigger problem, that we see going on in our space, and something we'd like to call more so the race to the bottom, if you will. And it's forms or inadequate coverage forms and or carrier representation that are coming to the market that are being sold in the fashion of which insurers really don't know what they're buying or being offered. So want to talk about that today and highlight some of these issues. Guys, what have you seen?
Geez, how much time do we have for this video?
I mean, and clarify, Brian, what do you mean by race to the bottom in that term? I mean, you're seeing it in the delivery space, and now we're seeing it from an insurance perspective. What do you elaborate on that? What that means exactly?
Well, ultimately, what we're seeing on the insurance side is, particularly price cutting, but more so sacrifice of coverage, right? And the more and more you sacrifice coverage, the less and less it's going to be there.
Do you think the insureds are being clearly explained to what they're losing in coverage, or are they just being sold on a dollar figure and the competition is glossing over, the coverage specifics?
100% being glossed over. I don't think there's any representation to the client that really is demonstrating to them the coverage that they're being sold or lack thereof.
Do you think the competition really understands coverage?
No.
I'd agree, based on what I've seen. And that goes from the small broker that's locally in your town all the way up to the national alphabet house brokers that we see in the space. Just had one this week, right? The client is a motor carrier. They're also filed as a freight broker. They broker freight. They have independent contractors operating under their authority, and they have one vehicle. And here comes Progressive on the filing. Never mind the fact that in Progressive, when you rate it and when you sign an application, it says, are we insuring all of the vehicles that operate under this authority? And you have to answer yes, or they don't rate the product, right? They won't quote it. They won't let you bind. Well, clearly, we're now either lying on applications or we don't have a good handle on what's actually happening in the business. Just frustrating, right?
Right.
Well, most of the time, I think they don't have a good handle. And I think this is the issue that we have. I mean, this is a unique class of business in the final mile space. Right, wrong, or indifference, it is what it is. We've grown up in this space, so we're familiar with it. That's why we have a 40-page application. I know people joke about it, but you have to ask questions because in the courier space, in the final mile space, they have their hands in everything, right?
Oh, right. We've said it before. I mean, the final mile industry are serial entrepreneurs, right? Again, if they can earn some dollars doing something, they're probably going to do it. They're going to figure out a way to do it, which is, again, bodes well for that industry, their survival, why they've thrived in tough economic climates, right? They do warehousing, trucking, bicycling, everything in between, right? So they are very chameleon-like in the way that they operate. So when you work with a broker that actually, and I just mentioned this the other day, that working with a program manager being a distinct advantage, who has thrived in this industry, has many, many years of data, customizes forms and coverage to suit the needs of an industry that is somewhat unpredictable, right? So I think all of those elements factor into trying to work with a broker. And again, what we're seeing from a competitive standpoint with, again, big brokers, small brokers, and everything in between is a lack of understanding, whether it's from their perspective or the market's perspective. Again, I'd like to give everyone the benefit of the doubt that they're not dishonest, but I blame some of this on somewhat of an ignorance perspective and just not understanding the nature of this class of business, which is why many of the insurance companies don't like to write this business, because of the uncertainty and the moving and shaking of the industry. So again, you have to have a program manager that really understands this unique niche, to make sure that there's not a motor carrier filing issue, not a coverage issue, and And again, an errors and omissions potential issue. There's just so many concerns you have to be aware of.
Well, I think let's take this, go down the rabbit hole a little bit further with what you brought up, Judge, right? So people really understand, what the squawk is here. If a standard traditional carrier, such as a Progressive, let's say, for instance, makes a filing with the Federal Motor Carrier Association, what does that mean? Is there endorsement that goes on their auto policy?
Yep. So it's the MCS 90, right, is the endorsement that attaches to the auto liability policy of whoever does the filing. What the filing says to the DOT, the US DOT, is, hey, look, we're the auto insurer for this motor carrier. They're required to have an insurance filing. Why? Because the government wants to know if they hit and kill somebody, that there's coverage in place to take care of that family, that estate, whoever, right? What it opens it up for is the fact that the DOT doesn't look at coverage symbols, right? They put that, and coverage symbol is what gives you coverage or doesn't give you coverage depending on your exposure, right? So the DOT says, look, insurance carrier, that's your job. You're going to figure out what's right for this client. And when you do, and you give us the filing, we're going to trust that it's correct. Okay. So let's take Progressive. Progressive writes typically what's called symbol 7, which means only autos you schedule on the policy have coverage. Okay. Now, occasionally they may throw in the hired and non-owned endorsement, which will give symbols 8 and 9. Traditionally, they're only going to do that in the trucking space or spaces where that exposure is truly incidental. Not in the final mile space where we have owner operators that are running under their own vehicles that don't carry commercial auto. And what would happen if we play this out, right? Driver gets into an accident operating under this insurance authority. The DOT says, great, Progressive, pay the claim. Progressive says, timeout. What are you talking about, owner operators? We didn't know they had any of these guys. Government's going to say, we don't really care. That was your job, not ours. You're going to pay the claim. And we've seen this happen. This precedent is set. So Progressive pays the $1 million claim. Guess what they're going to do next? Going straight back to the broker and the motor carrier who signed the application to say, gee, that's weird. You told us you didn't have any of this exposure, but obviously you do. We would like our $1 million back, because if we knew you had it at the start, we would have never written the coverage for you. And this is the issue.
So the insurance carrier can actually seek restitution from the client.
Absolutely. And fully, under the fact that they've misrepresented their risk and committed fraud by signing the application. So those are great legal terms that'll be coming at anybody that's done that and this situation plays out. So you can imagine not a real pleasant experience on the legal front.
So effectively, it's a situation where the broker thinks that they're saving the client money, but in reality could be completely jeopardizing their business.
100%. Yeah, it's bad, right? I mean, you're actually doing the exact opposite of what our careers are built on, right? The career here is built on, if you're an insurance broker, how are you protecting your clients, right? We're beholden to you, the client. We want to take care of you. We're trying to find the exposure and the risk for you and take care of it before you even realize it's there, right? By structuring the right policy, the right language, all those kinds of details, as opposed to, hey, here's the lowest price. You can go read the form. Let's see what plays out.
Yep. You think that the broker discloses any of this to the client in their proposal?
I don't think most brokers understand it, right? I mean, sadly, we had a colleague a long time ago that said insurance is a great business because a C student can look like an A guy because no one wants to bother to read policy language. So if you either are going to have a guy that's a great smooth talker that's a C student and doesn't read anything, or do you want a technician that truly understands how this works and is going to dive into the details and do all the heavy lifting for you so you can sleep safely at night?
Yeah.
Correct. I mean, again, I've said it before, we've never had in the 22 years of in business that we've been working with the final mile industry and previously before that, my father and his group, we've never had a major uncovered claim. Why? Because again, we pay attention to the details, right? I mean, that is the number one reasoning for insurance, is to protect the business, right?
When you get a claim call, what's the first question they ask you?
Am I covered?
They don't wait. So they don't ask you what's the price. How much did I save? Okay, there you go.
And again, listen, we'd be naive if we didn't recognize that cost is important. And again, it's not, that is, we are searching for the best product for the right cost, right? Because again, if you want the broad coverage, you have to pay for it. And because again, if you don't, if there's not enough of the premium to outrun the losses, the program's gone, or the carrier's about belly up, right? So, that's all problematic. There's a balancing act of pricing things correctly for the right premium to be able to sustain loss experience over a number of years.
So we touched upon one case in point here, right? I assume that there's other issues that we've seen come to market as of late. I know I have, particularly when it comes to the non-owned and hired insurance and form limitations that are being sold in the marketplace there. Namely, policy aggregates, defense within the limits, those being two key elements, just so that everybody understands, what a policy aggregate is. It effectively is a limit cap. If you have $1 million policy with $1 million aggregate, once that $1 million aggregate is satisfied in the term, you no longer have coverage, right? Whereas a traditional non-owned and hired insurance is $1 million of CSL for each and every occurrence. There is no aggregate or no cap, at least not the way we've always positioned it. Can we add it to reduce cost? Sure. But then one needs to ask, contractually, am I meeting the contractual requirements of my customers? What happens if I do business with 10 customers that all require me to carry $1 million of auto, and one customer in a given course of policy term has $1 million claim and it pays out? I no longer have insurance left for the rest of my 9 customers. Am I contractually breaking or violating the terms of my contract with my shippers? It's a great question. The bigger question really is this being disclosed? Because what I've seen in the marketplace is, from the competing proposals that we have, the client doesn't really necessarily know that these limitations are there. They're not in writing in the proposal summary. They're not explained to the insured. All we're seeing basically is circular adjustments around, we saved you 17, 20%. Right, but did you really save the client anything? If you actually do them more harm than good, that's the question here. And I think that's the part of which we struggle with, guys, is we've been doing this for 20 plus years, right? We've got a lot of friends and associates in this industry, and we've built coverage forms to protect them as best as possible. When we see that being jeopardized in the fashion of which what I call the race to the bottom, that's where we have a problem, because if people are going to buy this type of coverage willingly or unknowingly, which I believe that mainly is unknowingly, those coverages are going to go away. Now, this is a hard to place business to begin with. Couriers, final mile companies are, in many cases, in the underwriting community, are considered the redheaded stepchild of trucking. You do not have insurance carriers lining up to quote this type of business. So if you're going to sell product that is restrictive in nature, not explain it to insured potentially, and that's the product that's being sold, other people are going to take notice of that. They're going to start limiting their forms as well. We're not going to go back to where it was. And that's why we're tagging this the race to the bottom.